Nvidia's dominance in AI chips, it's looked pretty unshakable, hasn't it?
Absolutely. For a long time, yeah. Rock solid.
Until maybe now. Because for years, Qualcomm, well, they were the smartphone guys, right? Not really supercomputers.
Mobile chips, wireless tech, that was their core identity.
But looks like that might be changing.
It really does seem that way.
They've just unveiled this new AI server processor.
Aimed squarely at the big players in the data center.
Yeah, designed to take on Nvidia's GPUs and AMD's AI accelerators too.
It's a pretty bold move. Definitely signals they want into that whole AI infrastructure space. The big leagues.
So what makes this different? I mean, Qualcomm isn't just trying to copy Nvidia's playbook, are they?
No, not at all. They're not chasing that brute force GPU model.
Right.
Their bet is really on efficiency, power optimization, cost-effective AI scaling, that kind of thing.
And that's something the cloud providers, the hyperscalers, they actually want that.
Oh, desperately. Especially looking ahead to 2025, power consumption is a huge issue.
Right. But can a company that's, best known for mobile chips, can they really compete here against Nvidia's whole CUDA ecosystem and AMD's MI300 platform?
That's the million-dollar question, isn't it? Or maybe billion-dollar question now.
Feels like an uphill climb, potentially, in these silicon wars.
It certainly is, and then you layer on top.
The whole US-China tech tension thing.
Exactly, where access to AI chips is becoming, well, almost a geopolitical weapon.
So Qualcomm's timing couldn't be more critical? Wow, okay.
It's a fascinating moment.
Welcome to Facts Not Forecast, your daily edge in the stock market. Facts, insights, and opportunities you won't hear anywhere else.
And today we're doing a deep dive into this huge strategic pivot by Qualcomm.
Yep, we're going to analyze this new AI server product, look at the, frankly, brutal competitive landscape they're walking into.
And also unpack the financials. What's the muscle supporting this big shift?
We really want to find those nuggets of insight. Why is this more than just, say, a typical product refresh for them?
Oh, it's absolutely more than a refresh. I mean, you could call it an identity shift almost.
Right.
For the longest time, like you said, Qualcomm meant mobile. They're kind of the classic fabless semiconductor company designing cutting-edge chips but outsourcing the actual manufacture.
And their business, it's split in two, fundamentally. You've got QCT, Qualcomm CDMA Technologies, that's the engine room, designing the circuits, the software.
The actual silicon that goes in your phone, yeah. Handling voice, data, GPS, all that.
And then the other side, QTL, Qualcomm Technology Licensing.
That's the powerhouse IP portfolio. Think of it like a royalty machine, managing all those patents for 3G, 4G, 5G.
A steady, very high-margin revenue stream.
Exactly. And that funds basically everything else, including the big R&D pushes.
Okay, so now that core engineering DNA, the QCT side, that's being leveraged for this jump into the data center.
Precisely. The big news, the confirmation they're entering the AI accelerator market for the cloud. That's what sent the stock price jumping.
Yeah, sources mentioned it was up like 12% at one point, or right after the announcement, people noticed.
It did, and the specific chips they unveiled, the AI 200 and the AI 250, these are their direct challenge to Nvidia and AMD in the server rack.
And their angle, you mentioned efficiency. It leans right on their history.
Totally. It leans directly on that mobile heritage. High performance but low power design. That's always been their strength.
So they're not trying to build a bigger, faster engine than Nvidia necessarily, but a much, much more efficient one.
That's the core idea, yes.
Why is that distinction so critical right now, the brute force versus efficiency?
Well, it really comes down to the two main phases of AI work. Training versus inference.
Okay.
NVIDIA's GPUs. They are the kings of training the huge language models. That's the really intense, power-hungry part, teaching the AI.
Got it. But once a model is trained,
it needs to be deployed, used in the real world. That's the inference phase, where the model actually answers your questions, generates images, whatever it does, for potentially millions of users.
And that's where the scale hits you. The power consumption, the cooling costs. Those become the dominant factors.
Exactly. The sheer volume of chips needed for inference, for deployment, could be absolutely astronomical compared to training.
And that's Qualcomm's opening.
That's their entry point. They're betting that their deep expertise in designing mobile chips, which have to be powerful but sip battery life, translates directly into an edge for energy-efficient AI compute in the data center.
So the AI 200, the AI 250, they're built for that deployment environment.
Correct. Where efficiency can mean dramatically lower operating cost for the hyperscalers, less power draw, less heat, maybe denser racks.
Makes sense. But let's, play devil's advocate. NVIDIA isn't just hardware. They built CUDA. that software ecosystem. It's incredibly sticky, right? Developers are locked in.
That is the central challenge. It's a huge moat NVIDIA has built. No matter how good your hardware is, if developers can't easily use it, port their models. It's tough.
So how does Qualcomm overcome that inertia?
Well, the market dynamics might be forcing the issue. The hyperscalers think Amazon, Google, Microsoft, Meta, even folks like Cisco, they're actively, even desperately looking for alternatives.
Why? Just cost.
Cost is a huge factor with current high-end GPUs, but it's also supply constraints and, frankly, the need to diversify their hardware providers. They don't want to be reliant on a single source.
So it's risk mitigation too.
Absolutely. They need other vendors who can deliver strong performance, especially if it comes without, melting the power grid.
We hear about that constantly now. The AI boom is actually straining regional power grids in some places.
It is. So if Qualcomm comes along and says, hey, we can deliver X performance at, say, half the watts, that suddenly shifts from just being a spec sheet detail to a critical infrastructure decision.
Right. It's about the total cost of ownership, the TCO.
Exactly. You save on the electricity bill, sure, but also potentially on cooling infrastructure. Maybe you can fit more compute power in the same physical space.
So this makes Qualcomm's entry. It's a genuine competitive threat. It forces Nvidia and AMD to maybe focus more on efficiency too.
It absolutely does. It could reshape the conversation around AI hardware performance metrics. It's not just teraflops anymore, it's teraflops per watt.
And we can't ignore the bigger picture here. The global stage. This isn't just tech companies competing.
No, the geopolitical context is crucial. The US-China tech tensions, as we mentioned, they cast a massive shadow.
We see headlines about trade battles, export bans, specifically targeting the most powerful AI chips.
Right. And this highly constrained environment, it naturally creates a vacuum, or at least an opportunity for alternatives.
So if you're a hyperscaler, maybe outside the US, or just worried about future supply chain disruptions.
An efficient, powerful chip from a major established player like Qualcomm, one that might be more accessible, that starts looking extremely attractive.
It's basically offering a supply chain alternative in a market that's starving for options.
Precisely. So you have this convergence, the pressure from power costs and TCO, plus the geopolitical pressure for diversification. It creates this perfect window, arguably, for Qualcomm to make this move.
But a move this big, challenging established giants, building out potentially a new ecosystem that takes serious financial firepower.
It absolutely does. You can't do this on a shoestring budget.
So how strong is Qualcomm's foundation? Can they afford this fight?
They definitely have the war chest. I mean, this is a huge company. Annual revenues are tracking well over $40 billion now.
Okay.
If you look at the fiscal year 2024 figures and the trailing 12 months leading into mid-2025, revenue growth is actually accelerating, seeing solid double-digit increases year over year.
And profitability.
Very strong. Net income consistently above $10 billion annually. They generate a lot of cash.
Okay, so they have the income. What about the valuation? Because this is where it gets interesting, right?
Yeah.
How the market sees them versus this AI potential.
This is where it gets really interesting for anyone watching the stock. The market right now seems to be heavily discounting Qualcomm's potential as a major AI infrastructure player.
How so?
Well, look at their price-to-earnings ratio, the TTM-PE. As of late 2025, it's sitting somewhere around 19, maybe even a bit lower depending on the exact metric.
19. Okay, how does that compare to the AI darlings?
It's worlds apart. You look at some named competitors, Broadcom maybe running at a PE near 69, ARM Holdings way up there, maybe 180 something.
Wow, okay.
The takeaway is pretty clear. Qualcomm is still largely priced like a stable, maybe slightly cyclical, mobile component company.
Not like a company about to break into the explosive AI hypergrowth market.
Exactly. That gap between its PE and its competitors' PEs, that represents the market's current skepticism, or maybe just lack of pricing in, of their AI server potential.
So if these new chips, the AI 200 and 250, actually start gaining traction in that inference market,
that valuation gap suggests there could be a significant potential runway for the stock price to grow to re-rate higher.
and it sounds like their existing business, especially that high-margin QTL licensing arm we talked about, that's basically funding this big bet.
It's providing the stable, profitable foundation. It covers the massive R&D investment needed without destabilizing the whole company.
Put out their balance sheet. Can they sustain a long fight? Debt.
Yeah, it looks pretty solid. Their margins are excellent gross margins, over 55%. Net margins around 25, 26%. That's very healthy.
And debt.
It seems manageable, Sources indicate the net debt-to-equity ratio is satisfactory, around 17–18%, and critically, their operating cash flow comfortably covers their debt obligations.
So they have the financial fortress needed.
It appears so. They can sustain the multi-year investment required not just for the hardware, but also for building out the software tools the developers support, the whole ecosystem you need to truly compete with Nvidia and AMD.
And we should also remember that this AI pivot isn't happening in a vacuum for Qualcomm, right? They've been trying to diversify beyond just phones for a while.
Absolutely. That's a key part of the story. This move into the data center actually complements their existing diversification strategy, what they call QSI, Qualcomm Strategic Initiatives.
What does that include?
They've been pushing aggressively into other growth areas. Automotive is a big one, chips for infotainment, connectivity, driver assistance, also IoT, the Internet of Things.
Right. Chips for smart cities, industrial applications.
Exactly. And PCs, ARM-based laptops, plus robotics, and those XR markets, extended reality, VR, AR headsets.
So this diversification provides a buffer. It means they aren't betting the entire company just on these new AI server chips.
Correct. They have multiple growth engines running. It helps reduce their dependence on the ups and downs of the mobile handset market, which can be quite cyclical.
And that overall stability, funded by QTL, reinforced by this diversification. That's what allows them to take this shot at a potentially massive new market.
Precisely. It gives them the foundation to pursue what could be a huge long-term catalyst, opening up a completely new, potentially high-margin server revenue stream that could fundamentally shift the business mix over time.
Okay, so wrapping it up, Qualcomm is leveraging that deep mobile expertise, focusing on efficiency, backed by solid financials and diversification, to try and disrupt the Nvidia AMD duopoly in the AI data center, specifically targeting that massive inference market.
That's the plan. High stakes for sure.
So is Qualcomm's entry into AI servers the start of a whole new chapter for the company, or is it just going to be another headline that fades in the ongoing GPU wars?
Only time will tell, but it's definitely one to watch closely.
Really appreciate you tuning in for this deep dive. Until next time, stay sharp, stay patient, and let the market work for you.